Welcome to the 5-Minute Trading Edge, brought to you by the Institutional Edge System. Well, anytime there is a market boom or bust, it seems like the tulips get trotted out. For those of you that are new, the tulip bust that took place in the mid-1600s was probably one of the most widely regarded early boom and bust times that affected traders really adversely. You can see the price of a tulip here on the right. 1634 to 1637, it enjoyed a meteoric rise before finally someone failed to show up, left a trader hanging, and boom, there was a bust. And anytime there's a boom or a bust, or about to be any type of condition like that, there's always the talking heads on Bloomberg or MSNBC that are willing to give you an opinion on what exactly is going on, what's about to take place. Well, today we're going to talk about an approach for you to handle boom and bust conditions and to do it well right in your market. Specifically, we're going to look at the signs that we believe you should be watching for. And in watching for those signs, it will help you identify tapering conditions. When you have tapering conditions, you have sellers or buyers that are getting ready to back away from the table, or just like our tulip bust, possibly not show up. Once we have that, we know when we should enter, and that gives us the conditions we're looking at for a great either short or sell or buy or long location. Let's take a look at a recent chart here. This is our good friend, the ES. This is the jobs report that just came out right here. Now, boom, bust, jobs report always creates volatility. In this case, the jobs report wasn't that great. The market came to grips with it. Price goes down. But as a trader, how do we know really that we've found the bottom or that we've ultimately found the top? What is it that we should be looking for? Well, let's zero in on this jobs report. After the initial spike, we saw price come down and then consolidate. So if I'm looking for a short-term scalp on the fade, I'm watching this, and as price is coming down, I'm still steering clear. Why is that? Because there are sellers on the run here. These are imbalances here on the left. There's another one right there. The imbalances, sellers overwhelming the buyers are beating them out 4-0. The delta or margin on this candle or bar is 35.46. And that's the margin whereby which the sellers are beating out the buyers. But look at this. As we get down farther, we can see tapering activity. We see tapering activity in conjunction with an institutional trading level, a spot where historically in the past institutions have traded or made their move. And we have sequential decline. We have sellers getting ready to back away from the table and already starting to do so. 3384, 3003, 1046, and 41. At the same time, we have sellers coming in mass, 333 to 41. We also have our COT, or where most of the volume is taking place, in the bottom third. These are great entry locations, good indication that price is going to start backing off and come back up as it did. Two more things, though, that we're looking at. Look here to the right. In this chart, we had the value zone. This area right here is effectively where 70% of the volume is going off and where the market sees fair value. This is not where we want to be operating. So even though there is sequential decline with this candle, we don't like it because it is smack dab in this value area. Below this line is value area low. These are cheap conditions by market standards on a 24-hour look back. So even though I have sequential decline there, I'm in the middle of the value zone. I'm watching as there's more imbalances coming through, driving price down. This right here is my zone that I'm watching for parking and entry and taking advantage of this jobs report bust. So going in and closing out, handling booms and busts. Stay away from sellers or buyers on the run. Stay away from those bold numbers on the left or right that are in sequence, that are stacked up there. Wait for an exit out of the value zone. Don't trade in the middle of it. Trade on the edges of it. And then trade when you do with tapering activity. If you'd like to learn more about how you can profit by handling booms and busts, watch our free 4-part training at institutionaledgesystem.com. Until then, thanks for your time.